today, Bitcoin plummets to a near 3-month low. Elizabeth Warren slams Fidelity's crypto 401k offering. And Silicon Valley scrambles to hire top talent to build a Web3 future. Welcome to CNBC's Crypto World. I'm Kate Rooney. Crypto prices are in the red again today, adding to yesterday's sell-off. Bitcoin was worth just under $36,000 by noon Eastern. Ether, meanwhile, fell to the $2,600 level, and Polygon's Matic token was worth $1.04. Digital currencies are really at the whim of what's going on in broader markets lately. Bitcoin has been trading like an exaggerated version of the NASDAQ, and its correlation with tech stocks has increased in the past few weeks. It's still closely tied to some of the high-growth tech names. It's not showing up as an inflation hedge or any sort of short-term safe haven at this point. As tech stocks face steep losses this week, Bitcoin is also selling off. The next resistance level on the downside some analysts are looking at is now $30,000. A lot of traders look to the futures markets for signs of what's happening in Bitcoin. There was a boom in open interest with almost $1 billion worth of open contracts added on Wednesday, and that was almost completely wiped out just a day later as traders closed out their positions. Vanda Research also noting more people looking for downside protection and shorting the crypto markets. Some of that action in futures could signal people looking to hedge, and given that strong correlation to tech, Vanda calls it a, quote, ominous sign for broader risk assets. The crypto-related stocks are also getting hit. Not only are they pressured by those weaker crypto prices, there is the bigger picture as well of investors moving out of those high-growth tech names. Coinbase is a good example of that, and MicroStrategy. It's a software company that holds Bitcoin on its balance sheet. And then you've got the crypto mining stocks also selling off for another day in a row. Okay, on to the headlines. 2 U.S. senators are raising concerns over Fidelity's plans to add Bitcoin to 401ks. Senators Elizabeth Warren and Tina Smith wrote a letter to Fidelity and asked why the company chose to, quote, ignore the Department of Labor's serious concerns over adding Bitcoin to a retirement plan. The letter also called out potential conflicts of interest. The senators questioned how Fidelity could offer Bitcoin investments while also mining Bitcoin. Next, Swan Bitcoin wants to help employers provide Bitcoin benefits to their employees. The Bitcoin savings company launched a pilot program with 4 companies. Employers can send up to $100 in Bitcoin bonuses per month directly to an employee's Swan account. The CEO of Voltage, that's one of the companies participating in the pilot, told CoinDesk that the initiative was a, quote, win-win for culture and for long-term savings. Okay, on to our main story. The U.S. labor market is still red hot. Just today, we got new data that shows the U.S. economy added 428,000 jobs, which is better than Wall Street expected. And despite the continued hiring, though, job openings remain at record highs. 11.5 million, in fact. Every business is going out of their way to attract new talent. That includes companies diving into the world of Web3. CNBC's Kate Rogers explains the industry's frenzy to hire top Web3 talent.
As companies rush to build in Web3, opportunities are cropping up from startups and crypto companies to old guard technology firms. Job boards show thousands of listings for Web3 and crypto positions in both tech and non-tech roles. Avra Talent is actively recruiting for more than a dozen high-growth startups focusing on blockchain protocols and NFTs, and says post-pandemic hiring has more than doubled as the race for talent is on, and bringing on the right people can be make or break.
There's a lot of excitement about Web3 and what the changes that this can make in society. And it allows us we're finding it easier to hire for Web3 companies that are very clear about their mission.
And if you're not an engineer, that's not a problem. Opportunities are available across the spectrum for different skill sets.
There's a ton of positions we're hiring for, including community managers, content, marketing, pretty much anything that has to do with communication. That's a really big part of, in the early days of Web3 and crypto where we are, is helping communicate with everyone else about what a project does, what a company does.
Olaplex is one Web3 company that's looking to double headcount in the next 6 months. It's raised $6 million in seed funding and provides users with no-code required ways to build their own NFT storefronts and marketplaces to build digital art online on the Solana blockchain. The decentralized nature of Web3 means applicants can work from anywhere, allowing for more flexibility in hiring.
This community that we're all part of is very decentralized. Like it's a reality. It's not just like a philosophy or something. It's something that we actually live. And so we have people all over the world.
Some Web3 leaders are also leaving established tech companies to build this new version of the web. Ryan Wyatt is former head of gaming at YouTube and says the opportunity to create something new at Polygon Studios lured him to Web3. Polygon is a blockchain scaling network, and Wyatt's Studios division focuses on bringing games and media on board. He's looking to grow to 100 employees, and positions are open for people with backgrounds that range from fashion to HR. He's also hiring for traditional Web 2 roles, looking for people who are interested in the space and eager to learn.
I'm really fascinated by this idea of, decentralized app development, which is kind of embracing what the Web3 movement is. It's very nascent on what we will be building, what can be built. And that really excited me. I really like getting in early on things and getting my hands around them, and feel with my kind of big tech Web 2 background, there's a lot to bring over into Web 3 that I think will continue to help.
Web 3 is an exciting space, but it also has its critics. Some working on it admit it's the Wild West and a burgeoning industry, which brings into question the idea of stability in these positions for the long haul, despite how much opportunity and VC money there is flowing into the space today.
Okay, before we go, CNBC's Jim Cramer shared his thoughts on the recent Bitcoin sell-off. Here's what he had to say.
We thought that Bitcoin was a great hedge to inflation. It turns out that Bitcoin is super NASDAQ. Now, Mike Novogratz, whom I love, he's a terrific guy. He's been very right, made a lot of money on this. But the fact is, it's trading with the NASDAQ. I don't think you can disagree with the correlation.
That's all for this week, but we will be back here again on Monday with a lot more. We'll see you then.